as oil and metal prices were seen to bounce back last week. Is now the time to invest in commodities? Well, to tell us more is Ibrahim Patel, commodity specialist at Rand Merchant Bank. Good to have you with us this morning.
Thank you.
I'm sure the last couple of weeks have certainly been very interesting for you as you monitor your screens, because it almost seems as though commodities are recovering. Is now the time to invest, as the introduction and the question poses?
Yes, I think we've seen a good shift in commodities, and I think the two main commodities that people tend to focus on are showing some of the most interesting directional plays. So if you look at gold, for example, it's up 5% this month, but for South African investors, because of the weak rand, it's actually up 14% for the year. And then you've got oil on the other hand, which has been sliding since Monday, and both on the back of weak economic expectations. So on the gold side, the weaker economies globally and the weaker US economy means that a Fed rate hike is less likely. That actually bolsters gold, because when interest rates go up, investors don't earn an interest rate from gold, and so investors tend to leave gold. But if there's no interest rate hike on the horizon, that tends to push gold up. Whereas with oil, weaker economies, weaker demand, and at the same time we've seen OPEC increase its supply. They're currently producing 2 million barrels a day above forecast demand. Their production for September was 110,000 barrels more than August. So you've got this glut of supply, you've got refineries that are shut down for maintenance, so we're expecting crude stockpiles in the US to rise. So you've got this supply of oil, but you've got demand that's weakening, and that's actually driving the oil price lower, whereas the weak economy is actually driving the gold price up, because gold is a safe haven. And so you've actually got one set of economic fundamentals that's impacting two commodities in completely different ways. And that's what makes it a very interesting space.
Yeah, I just want to find out more on the productive sort of commodities like platinum. Obviously, we've seen share price collapse over the last year and a half, perhaps. So, what is your view in terms of that cycle? Where do you think we're going to see demand coming from around the world? Is there still a bullish case for things like platinum, iron ore?
We always believe there's a bullish case for platinum and for all precious metals. Platinum's an interesting one because gold behaves a lot like a currency. Gold is primarily an investment metal, and it has some industrial use, but people typically tend to look at it as a store of value. Whereas with platinum, it could go either way. It's a proper industrial metal, it's used in catalytic converters, and as such, it's inherently tied to the economic environment globally. More people buying cars, more catalytic converters, whereas a weak economic environment also then stimulates the store of value side of platinum. So platinum is a precious metal like gold, but it displays different characteristics. So platinum is an interesting one, makes it more difficult to call. We have seen some improvement in the price. So I think long term, with the fact that the global population is growing, there will be more vehicles on the road. And we should see growth in platinum. The thing to watch with platinum, though, is the recycling ratio, because about 40% of platinum is recycled back into the catalytic converters. So to the extent that the collection of scrap platinum and the recycling improves, especially in countries like China, where it isn't so high at the moment, obviously that affects demand for newly mined product, which could put a dampener on the price. But on the whole, we're bullish platinum's prospects going forward. Obviously, there is short-term volatility. It's not as reactive as gold to economic events as well, because of that industrial component. But I think platinum would still have a place. If you're a precious metals investor, by investing in platinum and gold, it actually gives you diversification within the precious metals complex itself. And that's where platinum's at its most useful from an investor's point of view.
So you're not too perturbed by the VW saga, I take it, then, that recently took place, and the impact on catalytic converters?
It remains to be seen where that fallout leads to. Obviously it looks negative for diesel cars and positive for petrol cars in the short term. That's why you saw the interesting divergence between platinum and palladium, because petrol uses more palladium in its converters, whereas diesel uses more platinum. So if people move away from diesel cars, it should be bearish for platinum, and if they move into petrol, it should be bullish for palladium, and that's why you actually saw that spread open up. So over the short term, you will get that volatility. What we need to see is, through time, how will the scandal play out? Will it actually affect diesel sales? It will definitely affect the company concerned, but how will it affect sales of that type of car? Because there's other manufacturers that make diesel cars as well. Would they fill in and take up the market share that's then lost? And we need to monitor those figures to see. In the short term, what interests the traders is that you can actually play these spreads. You could play long platinum, long palladium, short platinum, for argument's sake. So it opens up interesting trading opportunities.
I can only imagine, especially now as we also lead up, like you said, with gold and the oil fundamentals to the US Fed interest rate announcement.
Correct.
Where the can continues to be kicked down the road. Gentlemen, thank you so much for your time, though, today. Much appreciated. That was Ibrahim Patel, commodities specialist at Rand Merchant Bank.